All right, we are live. Day 375. Today, we're looking at 4-bedroom plus properties that have come onto the market in the last 3 days, right on the Redfin filters. 4 bedrooms, blah, blah, blah. And there's only been 10 homes. And the reason why I'm tracking properties that are coming onto the market recently is because, well, if you're building out a list of comparable sold properties, which I think if you have been following for the past couple of days, you can see that, well, you have some good comparable sold properties already, but what is happening in the market right now? What are properties being listed for as they come onto the market? Because not only do you have to keep track of historical items, but what if there is a property where the buy, rehab, rent, refinance, repeat strategy is really based off of comparable sold properties? And when you have newly listed properties that might be selling for less than what your historical comps have been selling for, that could be a problem. So you got to mitigate that risk somehow. So we spent a good amount of time in the last couple of months just building out a comparable sales list. But now, as I am getting ready to buy more properties in this area, what does that look like? What's the current market tracking towards? So yesterday or 2 days ago, I put in a new 4-bedroom property in 35214. So I organize it by zip codes. And I also make sure that I can qualify or tell people what subdivisions or neighborhoods they are in. So in this area, I went all the way, let's see, north of, what's it there? Sandusky, I guess. So a little bit northwest of North Pratt, but this is Sandusky. So for this property, I'm going to start noting down these details right here as I learn more about the property. 1121 Skyline Drive, Birmingham, Alabama, 35214. This is a 5-bedroom, 2-bath. You don't see that many 5 bedrooms. So this is going to be really interesting for you to figure out. It's only 1172 square feet. So this is going to be interesting. When was this built? This property was built in 1953. I'm assuming it was just renovated. It's being listed for $155,000, 155,000. It's being sold for $132 a square foot, listed 10/9/2024. Is there a lot size on this? 0.25 acres, 0.25 acres. There is a garage. Is there a basement? Let me see. No, there's no basement. Okay. No. Unless, no, they don't consider that. No. This is Sandusky. So I'm going to write that in here. And I see that up here, I see another property that was 4.3 and it's sold for $90 a square foot because that property was 2,700 square feet. But similar year built, but this property is being listed for much, much higher than that. So this is going to be very important for you to keep track of what's going on. So this is not a new build. This is renovated, tile flooring in half, LV. Renovated, tile flooring in half, LVP in other half, and fairly modern bathrooms and kitchen. So this way I can make notes to myself like, hey, what does a modern kitchen look like? It's okay, just white cabinets, decent countertops. Bathroom looks okay, right? It's not like super modern, but it's modern enough, right? Sometimes you don't necessarily look for subway tiles in every one of these bathrooms. Okay, now that I got these properties in place, what can I do? Okay. Now that I got these properties here, I see that the 5-bedroom, 2-bath is now on my list. Great. Now, does that mean I can't analyze this deal at the same time while I'm building it? Of course not. So if we just analyze this property, right? Let's just pull up a spreadsheet. $155,000. I'm assuming this property is relatively turnkey. So on my rehab calculator, let me go zero out some stuff. So for this property, I don't think I even need, I might replace the toilets with high pressure flush toilets. That's just my personal preference. I'm assuming I don't need to paint or do any more flooring work because it looks painted. I got $500 for some landscaping, and I got about $1,500 for the roof, just in case there's any patching on the roof that I can't see or issues I can't see from just the photos. So that gives me a rehab of $3,500. Now, monthly income rents. If you go to affordablehousing.com, which is what we typically do, you go to the owner section, market rent estimator, your address and your bedroom count, click on get estimate. This number worries me because this says $2,000 for a 5-bedroom property, but the radius is 11.5 miles. That's a huge, huge radius. So what I would do instead to get better comfort is I'm going to go to Zillow and I'm going to go to for rent, and I'm only going to filter for 5-bedroom properties, and I only want houses, right? Because it's a single family home. And you can see that there's one property in Central Pratt that's listed for $1,850, but I would argue that this property is double our size, right? This is 2,300 square foot. Our home is about 1,100. So this 1,850 doesn't look like a comp, and it's a 5-bed, 3-bath. Okay. Now over here, there's another 5-bed, 2-bath, 1,953 square feet for 1,400, and it looks renovated. Let me see how many contacts there are. Now, a good rule of thumb, if you want to see when I was priced correctly, is whether or not the number of days on Zillow is equal to the number of contacts. So if this is 10 days and this is 0 contact, there's something wrong with this property. I mean, I'm not sure there's something wrong, but it worries me a little bit. And by worry, I mean, why hasn't anybody looked for this property? Maybe because there aren't that many 5-bedroom vouchers, maybe? I don't know. But it's a at least point that you got to take into consideration. Okay? Now, 1,400 might seem a little bit more fair. It was 1,900 square feet. How about this property? It's 1,500 square feet at 1,550. This has only been on a property, but it's renovated. So I might go with 1,500 because this is a 5-bed, 1-bath, 1,820 square feet. Our property is a little bit smaller. So it might be 1,400, might be 1,500. So let's start with 1,400 first, 1,450 maybe for rent on a 5-bedroom property. It's a 5.2, so that hopefully will be better. Our property taxes, what is that going to be here? I'm just going to get that right from the Redfin page. $100 for property taxes, $100 from the homeowner insurance. Now, for taxes, obviously you got to double check with your county assessor records to make sure that that number is accurate. Now, when you see that it's listed for 120 on a monthly payment calculator, I mean, that's just an estimate, right? But I always put an additional 20% premium. What do you want more coverage for your property? But usually insurance companies view investment properties as riskier assets. So they're going to charge a higher premium. So that's why I'm adding a 20% premium by taking the existing mortgage insurance estimate number on Redfin of 120, and I'm multiplying it by 1.2 to get to a higher premium. I'm setting aside 10% on my rent every single month for maintenance because that is money that doesn't belong to you. I just got a bill for $15,000 for a roof repair in Scottsdale. I had to replace the parts on 2 AC units, and that cost $3,500. So these are all real expenses, right? They're piling up, okay? And then I got property management expenses for 10%, and I got 5% for vacancy. So these are all real expenses. Now, if I can go to my down payment percentage in F19 and go 25% down, because that's what I've been trending around. Actually, I've seen it at 20%. So let's do 20% at 7% interest rate. If you do it that way, your cash and cash return is 0.6%. Assuming you rent this property out for $1,450, you will cash flow $19 a month. That's a 0.6% return on your money, assuming you can buy this property for $155,000. Assuming your rehab is $3,500 with a 25% down and 7% interest rate. Okay, well that's not ideal, right? Because again, this is not investment advice. We're not soliciting any investments on the call, but if I don't get at least a 10% return on my capital, I mean, it's really hard to swallow a 1% return when you can just take that money, go buy a 30-year or 10-year treasury bond yield for 3.5, 4% with much less risk, right? Because that's considered risk-free because the federal government is intending the return they give on that is always intended to be risk-free because the federal government should not default, right? They can continue to borrow more money. So if you are going to spend all this money, right? So 31 grand in rehab, $3,900 in closing costs, and not $3,500 in renovations, you're spending 38 grand out of your own pocket for what? For 1% return? That doesn't really make any sense, right? You can go buy investment treasury bond yields for 4 or 5%, like 8 times the return on this capital. Well, in that situation, why would you take on all this execution risk? And by execution risk, I mean, what is the risk of you taking on a contractor, hoping and praying that the contractor shows up on time, starts a project on time, finishes on budget, and delivers a great experience. That's execution risk. That takes time and energy out of your day. So you got to determine, hey, is this $19 a month after all my expenses are taken and accounted for worth how much time I'm spending to analyze the deal, talk to investors, blah, 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 blah. That's your own choice. That's your own decision. That's why you got to talk to your own investment professionals, get advice from them, because you understand your goals and your risk appetite the best, or they might know. It's definitely not me. So let me do one more type of scenario. What if my asking price gets lower to 100 grand? Well, now all of a sudden I'm making 14%. Now it makes sense. What if I'm at 120 grand? Watch what happens to this cash and capture, right? 8%. How about 110? So this might be a deal at $113,000 to meet my target return 10%. Because now I'll be cash flowing to $1,450, assuming everything else stays constant, right? I'm still getting $1,450 for rent. My percentages of rent is still the same for expenses. I'm cash flowing $242 a month. I mean, that's a 10% return, but now I have to buy the product for 113 grand. So now I know sort of what my buy box is, right? I need to buy a turnkey property that's 113 grand. That's a 5-bedroom property, assuming I can get 25% down, 7% mortgage interest rate. That's what you want to go through. That's what you want to understand if you're buying a property turnkey on the market. If it doesn't work, you move on. That's it. So why did I do this, right? I hope you guys are able to take and copy my homework. I hope you guys are able to build the confidence so that you know what you're doing, so that when the time comes for you to pull the trigger on a deal, you can say, hey, I know what I'm doing. I've been looking at deals for the past 375 days, and these were all not deals, right? That's how you build a consistency. And if you guys want to copy the spreadsheet, again, I didn't make the spreadsheet from scratch. You can go to affordablehousing.io, not .com, affordablehousing.io. Go to the Get Deal Analysis tool and go to your name, your email, your phone number. I won't spam you, but that's the fastest way to get a copy of the spreadsheet. I didn't make it from scratch. I didn't make this from scratch. I got a few from other folks. I put in my own comments. I tweaked it myself for my own markets. You should adjust it for your own markets. And understand, how do you present it to yourself? How do you present it to your investors? How do you present it to your partners? Because look, everybody's risk appetite is different, right? You might be looking for 10% cash and cash return. Some other people might be looking for, hey, if I can just break even on my cash flow every single month, but I know that my $1 million property is going to go up by 5% every single year, which is very speculative, first of all, very risky, because you're betting on appreciation. It's almost like gambling. Well, some people make a lot of money that way, right? Some people do. So don't always assume that cash flow is king, although cash flow does pay the bills, all right? Come up with your own strategy, your own portfolio diversification strategy. Don't put everything in all one bucket. I mean, that's some of the biggest investment principles in the world. You really want to avoid losing money if you can. That's Warren Buffett's, right? Don't lose money, don't lose money, don't lose money. So I hope you all have an amazing Wednesday. I hope you all are able to spend some quiet time with your family and friends today. I know I thoroughly enjoyed my time on this podcast. I mean, on this live with all of you. And I hope you all have an amazing Wednesday. I hope you all spending some. All right. Have an amazing day. I'll talk to you all tomorrow. Have a good one.